All right, so I'm going to run through an ordinary level cash flow question. I'm using the example in the book, which is on page 412 in your textbook. So, question is this bit here, here, and then that's what they ask you to do. So that's just start a solution. That's just some other notes from the chapter. So what you are given is the very bottom of a profit and loss account. So you've got your operating profit here. That's what you get after you do your sales, less cost of sales, get your gross profit, and then take away expenses. You get the operating profit. So that's kind of when they start giving you the information. It's from that operating profit figure, so your interest, tax, and dividends taken away. They will also give you a balance sheet, and what they were asking you to do is three things, and I'll go through each of those in turn. So the first one is to reconcile the operating profit to net cash flow from operating activities. I'll just briefly talk about here what a cash flow statement is. So this operating profit number and profit in general, if we're asked to define profit, to say what profit is, we will sometimes say something like it's the amount of money a company makes. That'd be kind of a quick and easy kind of definition of profit that someone on the street might give you. There's a bit more to it than that, though. So if I just go back to a fully done out profit and loss account here, if I talk about profit as being the amount of money a company makes, then you might expect that if I look at how much money the company had last year versus this year, that will be the profit. The profit is like the increase in cash or the increase in bank that the company has, but it's not, okay? If you were to compare last year's bank account to this year's bank account, the difference is not going to be the profit you made in the year. Why is that? Well, if we look at this kind of profit and loss account that's done out, the net profit figure here is about 75,000. But there's some non-cash stuff included in this profit and loss. So there are some items that you add or take away in coming to your net profit that aren't actually movements of cash. It's not you receiving cash, it's not you paying out cash. All right, and that's what we're going to try and do with the cash flow statement, is actually get that number. How much extra cash do we have here? So basically we're moving from what I would call an accounting profit closer to a cash profit, how much actual money we made this year and where that money came from. So just really quickly, two reasons why this isn't the cash profit. If we look at this profit and loss account, we have depreciation here. Depreciation isn't actually you paying any money or cash out. It's an expense, it's taken away from your gross profit, but all it is a way of writing off the cost of an asset over its life. So this is something maybe you've bought a few years ago, and over maybe 10 years, you're just taking a little bit of its cost off your profit for the amount of time you'll be using it. So if you take that away in getting to profit, if you want to actually get cash profit, you'll need to undo that. You'll need to add these depreciation amounts back. Related to that, if you were to say buy a new fixed asset, so say if this company was to buy a new car for 50,000 euro or buy a new van for 50,000 euro, that payment of 50,000 euro in cash doesn't go into the profit and loss. It goes onto the balance sheet. So you're not recognizing the fact that you have spent 50,000 euro in coming to this profit figure. Okay, so I would need to take that away if I actually wanted a statement that tells me how much cash was spent in the year. All right, so that's just really briefly, quickly what a cash flow is, or what we're trying to do here. So first thing I'm asked to do is reconcile the operating profit to net cash flow from operating activities. And what that is asking you to do is take this operating profit figure and, using some information I'm going to get from the balance sheet over here, come up with the actual, I suppose, cash profit, you might call it, what they're calling here net cash flow from operating activities for the period. All right, so just if you're starting this out, reconcile the operating profit to net cash flow from operating activities. So that's your heading. All right, so reconciliation of operating profit to net cash flow from operating activities. So your starting point is your operating profit. And in this question, that's €340,800. And what I'm trying to do now is undo some stuff, some non-cash items that make up that operating profit. So the first one we mentioned was depreciation. Okay, so some depreciation was subtracted in coming up with that operating profit figure. So I'm going to undo that by adding the depreciation back. Okay, I get the depreciation from the balance sheet over here. So if you look in the balance sheet, in 2008, the accumulated depreciation was €211,000. Go forward to the 2009 balance sheet, and that's €312,000. Okay, so during 2009, there's an extra 100,000 depreciation. So that must be the depreciation number that went into my profit and loss account. All right, so as I said, that would have been subtracted in coming to profit. So I'm going to add it back to get rid of it. Okay, so you're always going to add back depreciation. Some of the other stuff we're going to come to next, sometimes you'll add it, sometimes you'll subtract it, but depreciation is always going to be added back. Okay, so you just take this year's accumulated depreciation number, so 2019, that's the year you're doing the cash flow for. Take away last year's, so if you do 312,000, take away 211, 200, that's €100,800. So as I said, we're going to add that back, but there's a few other things to deal with as well. So another non-cash item which goes into operating profit is when you make sales on credit. So sometimes you will sell stuff and you will get the cash for it straight away. More often in business, you will sell your goods and get paid for them later. Okay, so that's what sets up debtors for us. Okay, debtors is when people don't pay us for stuff straight away, they owe us the money later. So basically, some of the sales that are included in this operating profit, so if we were to go back to the kind of top of that trading account where that operating profit was the answer, there's some non-cash sales included there that we want to take out. Okay, but then there also might be some cash we're receiving from last year that we're only getting this year that we want to include. Okay, so where we get this is from the balance sheet in the debtors section. Okay, so if we look at debtors here, at the end of last year, I was owed €112,800. So at the end of last year, I was owed that money. So this year, I'm actually going to get that money. Okay, so that €112,800, I actually received that this year. So I'm trying to get how much cash did I actually get in this year in this statement. So I should include that 112,800. So you're going to add on last year's debtors. Okay. On the other hand, this year's debtors, this 93,600, that's sales I made this year, but I haven't actually received the cash for them yet. I haven't been paid for them yet. So I've included those sales in this year's sales, in this year's profit, but I'm not actually getting the money until next year. So I should take those out of operating profit. So I should take that 93,600 away. Okay, so the 112,800 I was owed at the end of last year that I received this year, I add that in. The 93,600 euro that is for sales I made this year, but I'm not actually going to get it till next year, I should take that out of my profit figure. All right. So if we just do the plus 112,800, take away 93,600, that's 19,200 that I add on. All right. So sometimes this figure might be bigger and you'll end up taking the change in debtors away. All right. So that, like I said, this one and the next couple that we'll do, they can be added back or they can be subtracted. Unlike depreciation will always be added back in the questions you do. The other one up here in current assets you're always going to see is stock. Okay. So I think the kind of logic behind what you do for stock is maybe harder to track in your head than what you do for debtors. Like it's like I said, it's pretty easy to think that through. That 112,800, I'm getting it this year, so I add it on. That 93,600, I'm not getting it till next year, so I take it away. Stock, I think the reason you treat stock the way you do is maybe a little bit harder to think through. So what I would say is it's a current asset as well. So just follow your treatment from debtors. So in debtors, I add back last year's number. I added this 112,800 on. So let's do the same for stock. Let's add the 156. And then let's take away the 165,600. All right. So add last year's number on, subtract this year's number on for current assets. So 156,000, take away 165,600, and that's minus 9,600. So I'm going to take this one away. All right. The other one then that you need to look out for is creditors down here. Okay. So creditors, amount falling due within 1 year. So creditors, this is purchases that would have been up there in your trading account that kind of gives you eventually your operating profit. So some of those purchases would have been on credit. I'm not actually paying the cash out this year. So I'm going to make that adjustment here now as well. So again, we can think this one through. So at the end of last year, I owed 100,800 euro. So creditors is to do with purchases. It's money I owe to other people. So that 100,800 euro, I'm actually going to have to pay that this year. So that is going to be an outflow of cash for me. I'm actually going to have to pay those people for what I purchased. On the other hand, at the end of this year, this 108,000 euro, I don't actually have to pay that until next year. So that money isn't actually flowing out in 2019. So I can add that back. Because that 108,000 euro, that would be included in this year's purchases. So that would have been subtracted in coming to this operating profit. But I'm not actually spending that money this year. So I'm basically undoing it by adding it on. All right. You'll see it's the mirror image of debtors. So in debtors, I added last year's number back and I subtracted this year's number. Creditors is the mirror image. So you subtract last year's number and you add this year's number back. All right. So just on the calculator, 108,000 minus 100,800, that's plus 7,200. All right. And that's the four that you always want to look out for. All right. It's in the book a few pages back. So it kind of gives you, if you would prefer just to learn what you do. So an increase in a current asset, the current asset kind of increases from last year to this year. It has a negative impact on cash. You take it away. If the current asset decreases, a positive effect on cash, so you add it on. So it is there for you to learn kind of what an increase or decrease in debtors or stock or creditors do. I think you're better off being able to think through the logic behind it, like I just kind of explained there for debtors and creditors. With stock, I would just follow the treatment of debtors, as I say. I think it's easier to think through what am I at for debtors and creditors. All right. Once you have all those numbers, just tot it up on the calculator. So 340, 800 plus 100, 800 plus 19, 200. Take away 9600 plus 7200. So that is 458, 400. And the question tells us what to call that. All right, so I was told this is the reconciliation of operating profit, what I started with, to net cash flow from operating activities. So net cash flow from operating activities is what I call this. And as I said, what that is doing is it's removing a lot of non-cash stuff from this operating profit. Okay, so it's going from what I would call an accounting profit. It includes some non-cash items like credit sales, credit purchases, depreciation. It is undoing those, and it is getting you closer to an actual cash profit for the year. So how much more money you made this year versus last year. Now, in the next section, the cash flow, we're going to include a few more cash flows that actually happen during the period. But this is basically, as I say, turning that operating profit closer to a cash profit for the year. All right, I'll go on and do the cash flow statement then in the next video.